Good evening, everyone from beautiful Midwestern Illinois. It's Friday, May 29th, 2026. We have closed the books on another business week in Fantasyland with another stellar performance by the market in completely ignoring and avoiding reality. The news headline of the day is Special Agent AI Groundhog has been selected to oversee the Iran US peace negotiations. The mastermind behind the number one deal maker in history is now in charge of making sure that everything is going to be awesome again. It says right here, I have calculated peace. You're welcome. The threat level is minimal. The profit potential is maximum. He's got a couple of macros that he can hit to immediately alert the news media of, the updates that are, coming out of the negotiations. And that will make sure that the market responds instantaneously to the developments as we, move through this. The stock market is at another record high. We're going to cover that. The Cushing facility is almost at tank bottoms. If I look at the energy doomsday clock here, it looks like we've got about 4 days left until we hit the minimum. So at some time next week, we are going to need to do something about this. The facility cannot stay below the operational minimum as very intense structural damage may occur if the crude oil level is not brought up to a sufficient number. So they're definitely going to have to do something about this. There are plenty of reserves in commercials, and the SPR has about 3 or 4 months of supply before hitting its statutory minimum of about 150 million barrels. So that's not a direct immediate emergency like the Cushing, but it's getting there. It does not look like the strait is going to be open anytime soon. And the news story is very, self-explanatory here. This is what's going on. So futures hit another record high after pricing in the same Iran deal every day for the past month. U.S. equity futures are higher, continuing their slow motion gamma squeeze into record territory as traders waited to see whether America and Iran could finally get the peace deal they have already priced in every single day for the past month. As of 8 a.m. Eastern Time, S&P futures are up 0.1% and poised to rise for the ninth consecutive week, the best streak since 2023. NASDAQ futures also have modest gains. In the pre-market, Mag 7 are mostly lower, with Amazon down 1%, Tesla down 0.7%, Apple down 0.6%. The laggards, even as evidence of relentless demand for AI infrastructure stocks was on display, as Dell jumped 37%. After the legacy computer maker gave a sales outlook that far surpassed analyst estimates, fueled by servers designed to run AI workloads. So Dell now has joined the select group of others whose stock price has gone up in the double digits abruptly, all of a sudden, all at once. This has to do with the government having an equity stake in these companies now. So the big tech is now getting a boost from the establishment directly investing in their stocks. This has never happened before. Also says here that MSCI All World Country Index on track for a second monthly gain. Both European and Asian markets were higher overnight. Bond yields are flat at 4.44%, and the US dollar remains unchanged. WTI crude fell 146 to 87.44. While Brent traded around $92, base metals are all higher. Gold added 0.7%. economic data slate includes April advanced goods trade balance and retail wholesale inventories 8:30 a.m. and May MNI Chicago PMI 9:45, several minutes earlier for our subscribers. Fed speakers slate includes daily 7:45 to 12:40 p.m. Bowman and Paulson, so lots of Fed speak today. The market. What did the market do? Let's see what the market actually did. So the NASDAQ chopped around for most of the session and ended steady at 30,389 and a half. If we look at the 15-minute chart here, we can see that there was not a whole lot going on. We chopped around overnight. We had a rally in the morning. We gave back that rally, and we pretty much stayed in the range that was established in the first couple of hours of trading for the rest of the day. So nothing really to see here. Market's on the all-time high. It's not screaming to the upside, but it is up a couple hundred points, and it's obviously not giving anything back. This is the most powerful rally ever. We've rallied almost 8,000 points from the low near 23,000 at the end of March. So stock market at all-time high, oil's chopping around, down a little bit. On the news, it's a negotiation. It's almost done. We're in the final stages. This is just the reality of the situation. We see the same thing every single day. And although it's the same headline, it's spun a couple of different ways to make things interesting, and the market keeps buying every single word. Now, if I go to the summary of the article, of course, I had my assistant here give me a bullet itemized list of what this thing is about. I said, run through this article and give me the theme and bullets. Boom. Link provided, and it comes back. The theme of the article is essentially markets have spent the last month repeatedly pricing in the same Iran peace deal headline while ignoring the fact that the underlying conflict, energy disruptions, and geopolitical risks remain unresolved. Nothing has been done. No formal agreement has been reached. The military escalation has not died down. It has, in fact, gotten worse ever since. Energy crisis continues. We're now down 1.25 billion barrels. The strait has been closed for 90 days, 23 hours, 43 minutes, and around 10 seconds. So this is starting to get really serious. It really doesn't look like this is going to end anytime soon. We're being told that, everything's going to be awesome pretty soon and it's going to go back to normal. And the facts just do not support that at all. Hang on a second, this is loading again. Core theme, the article argues that the market has become conditioned to buy every variation of the same story. Iran deal close. Key phrases. Hormuz reopening soon. Ceasefire framework agreed. Final draft reached. Progress made in talks. Each version of the headline pushes futures to new highs and oil lower, even when subsequent reports contradict or walk back the optimism. Iran basically says, no, none of that's true, and Israel continues to strike Lebanon with more intensity than ever when the ceasefire in Lebanon is one of the key points of the whole deal in the first place. So of all the points that are in the deal, the Lebanon ceasefire is one of the main priorities, and that is not even close to being under control. Key bullets. Markets keep pricing in the same deal. Futures continue reaching record highs on repeated reports that a U.S.-Iran agreement is near. Similar headlines have appeared for weeks with only minor changes in wording. It's the same story, recycled, rehashed, reprinted, rebranded in a different way. The market reaction has become almost automatic. Stocks up, oil down, yields down. Same day, all day, every day, no change at all. Well, this is going to continue. However, there is a time limit on this. There is a expiration date on the phase of this market, and it has to do with the actual physical supply of oil and oil products, distillates, gasoline, Europe's going to run out of jet fuel. That's going to be the first indication of a shortage. Then some of these other lesser developed countries, they're already on rationing. They're going to experience major shortages. Then finally, after all of that, it's going to find its way here. And when it finally gets here to the United States, when the reality of a real physical supply shortage gets here to the United States, the Chevron CEO was already out on the news wires talking about the actual supply shortage and what they are doing in response. And they basically said that they are ignoring the futures market. So the futures market says one thing, and now one of these top oil execs from one of the biggest companies in the industry says, we're not paying attention to the futures market. So the futures market is more of a display item at the moment. The real market is starting to think about this very, very seriously. AI is doing most of the heavy lifting. Hence, we have special agent AI Groundhog in charge now. He's going to solve everything. I have full confidence that everything is going to be absolutely awesome. Just, give him a little bit of time and he will magically sort all this out. The article points out that AI and semiconductor enthusiasm remains the dominant force behind the rally. Even when geopolitical tensions rise, traders quickly return to buying the technology and AI-related names. Memory, semiconductor, and AI infrastructure stocks continue driving index performance. So even though we've already bought every single microchip from here until about 10 years into the future, somehow we need to buy more. Reality keeps interrupting the narrative. This is the problem. The market doesn't like reality. Peace talks are often followed by actual reports of new military strikes, drone interceptions, maritime incidents, renewed threats around Hormuz, border skirmishes, and everything else. Yet markets repeatedly revert back to the assumption that a deal is imminent. Well, that's what we all want to believe, isn't it? That everything's going to be fine, that this nightmare is all going to be over soon, right? That's what we want to believe. Well, it's not true. Oil becomes the barometer. The futures market is the barometer is broken. It needs to be fixed. Every positive headline about negotiations tends to trigger sharp declines in crude. Yeah, the market goes down more than it's gone up all session in a few seconds with like 10 times the volume. Every chart looks the same. It looks like this, boom. Looks like this, boom. Looks like this, up in the morning, we come in to trade, boom, done. Every setback in talks tends to push oil back higher. Right. Every time reality starts to come back into the market, the oil starts going up. Reality, oh, wait, we got a shortage here. Wait, we're not going to have enough gasoline. Wait, there's no tankers coming out of the strait. Wait, the oil facilities are all blown up, right? Facts. Laws of physics. The article portrays oil as the market's real-time scoreboard for belief in the peace narrative. Well, according to the crude oil market, the deal is largely negotiated already. The market has become desensitized. The broader criticism is that investors are no longer evaluating each development independently. Instead, peace rumor, buy stocks. Oil drops, buy more stocks. AI rallies, buy more stocks. New military incident, hold off a second, wait. Return to peace rumor, repeat. The article compares the process to a daily cycle of ceasefire hopium, repeatedly pushing markets toward new highs. Well, that's what junkies love. Their endless supply of hopium. One sentence summary. The article's central argument is that markets have spent the past month repeatedly pricing in the same Iran peace deal story, using every diplomatic rumor as justification for new record highs, while largely ignoring the recurring military escalations and unresolved structural risk underneath the surface. Nothing has changed. Absolutely nothing has changed in weeks. The strait remains closed. The tankers are still floating out there. The war is still raging, probably even worse than it was before. The State Department, wants the strait to be reopened, and that was one of their, conditions on the agreement that, like the strait, should be open for traffic, immediately, and this and that and this and that. The strait was open before the war started. Most of the things that are on their list that they want Iran to comply with, those were already happening before the war started. So now, after we've expended all of these resources, effort, energy, lives, and gambled with everybody's future, now we want what was there already before the war started? This is obviously absolutely insane. I'm glad we're going to get a couple of days off from the madness. I will be back here on Monday. I look forward to seeing you guys there. Until then, take care and good luck.